Greetings, everyone. Very happy to have you all here because today we're going to discuss the key manufacturing PMI, which will be out in about 10 minutes. And me and my colleague Max will cover it for you today. So as you can see, at the current moment, the forecast stands at 52 and the prior figure stood at 51. And so just to remind you, it's a leading indicator of economic health since businesses react quickly to market condition and purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. And if we'll take a closer look on what happened in the previous months in UK's private sector, so it decelerated in the 3 months to August, but the export picture remains weak. The consideration of British industries' latest growth indicator report has signaled. And the indicator, which takes in the manufacturing, retail, and services sector, showed that growth of the UK private sector economy picked up to a pace, just a drift of that recovered in the 3 months to May. Growth in the 3 months to May was the strongest for a year, according to the indicator. And the growth indicator report is a composite of the CBI's industrial trends, distributive trades, and service sector surveys. The CBI also cited particularly large contributions from the business and professional services and retail sectors to the improvement in growth in the 3 months to August. However, it said a weaker outlook for global growth and stronger sterling means that net trade is expected to be a drag on the UK economy, something that is reflected in the relatively sluggish performance of the more export-oriented manufacturing sector. The CBI also noted downside risk to the UK economy arising from a slowdown in growth in China and continuing uncertainty over the economic situation in Greece. And Ray Newton-Smith says that while the overall domestic picture is looking bright, exporters still face a challenge, especially in light of a weaker outlook for global growth and the strength of sterling, making them less competitive. Businesses will need to keep a close eye on turbulence in the market and whether it spills over into the real economy. The UK's direct exposure to China is limited, but slower growth there and in other emerging markets has a knock-on impact on continents around the globe and could bear down on UK trade. And let's move on and we'll have a closer look on the economist expectation in this regard. As you can see, we have a preview of top 10 economists from different financial institutions surveyed on the matter. And according to their views, we have the Bloomberg survey summary. Over there, the median estimate stands at 52. Average estimate stands at 51.9. High estimate stands at 52.5, and low estimate stands at 51.7. Whereas the number of estimates this time has reached 27. Sorry. Just to continue discussing the data which came from UK. So last week, the Employers Organization upgraded its growth forecast for the UK from 2.4% to 2.6% this year, and from 2.5% to 2.8% in 2016, saying the upturn would be powered by the twin engines of rising household spending and robust business investment. And on Friday, the Office for National Statistics confirmed an initial estimate that GDP rose by 0.7% in the second quarter, up from 0.4% at the start of the year. And that pretty much sums up the fundamental part of this economic data release. I would love to pass the floor to Max from now on.
Thank you very much, Polina. Hello, everybody. I hope you have a great day. So yes, now let's discuss the technical part of the data released today, which is on the, of course, the UK manufacturing PMI, as Polina has just already noted, and as you already know, the average expectation stays at 51.9 points for the month of August, and it's basically the same, or almost the same number as we have seen it in July. So there is no change expected, or there is a very slight upward change expected at the moment. But still, we are going to have the positive surprise trading strategy today and the cable for the purpose of discussion, because this currency pair still has a quite good bullish sentiment at our market, and also the other market participants who provide their sentiment for us. They also have very positive sentiment on the sterling at the moment, and their sentiment has actually improved since the last time we have discussed this currency pair. I guess it was, if I'm correct, it was last week. So now let's move on to the currency pair developments themselves. So as you can see, the pair is trading at 1.5360 level at the moment. And of course, as usually, to project the possible market reactions after the data is published in around 2.5 minutes from now, let's have a look at the previous market reactions for the same data release. And what is interesting here is that last month the market reaction was very small, just 9 pips for the cable, and it's comparing to, let's say, 62 pips we have observed back in May, or 41 pips we have observed back in July. Therefore, in case we see no major swings in the data today, we can also can observe very small market reaction from all the currency pairs of the sterling. And despite the average market reaction of 31 pip actually for the all 5 months, for the 5 preceding months, we are going to be conservative and place the take profit level just some 10 pips above the current market price, and which is also the daily pivot point and the 4-hour S1, which act as the resistances for the first take profit level. And the first support is also placed some 10 pips below the current market price at 1.5346. However, of course, if we see major swings in the data, we also can see the pair moving significantly upwards or downwards. And for that purpose, we have the second take profit level at 153.80 and the second stop loss level at 1.5330. And of course, they both are supported by the technical levels. For the take profit 2, it's the 4-hour pivot point, and for the stop loss 2, it's the 4-hour S3. So I guess since I have just some 30-40 seconds to go till we are going to have the data already in the chat section, I will just shortly cover the technical indicators, which are actually showing very interesting situation because they are completely mixed at the moment. We have 8 indicators, and each of them is showing buy, sell, buy, sell, buy, sell signals. So they are completely mixed and a bit lost at the moment, so they have no clear indication. And maybe they also don't really know what the data is going to be. Yes, actually we already have the data in the chat section. So the manufacturing PMI actually came worse than expected, just at 51.5 points versus 52 points expected, and down from 51.9 in July. And of course, it's not a very big swing from the previous reading, but still it's a miss from the average estimate, and therefore we have a negative reaction on the pound at the moment, as you can see. Even though the average reaction has not been very strong at all, so some 15-16 points at its downward peak for the last minute of trading, and currently the pair is trading at the first stop loss level of 1.5344, which is actually pretty much in line with expectations, because the data is not too disappointing, but it's not too encouraging as well. So I guess that for now that will be all from my side on the technical part for the data released on the UK manufacturing PMI. See you all tomorrow when we are going to have the data released on the ADP employment change in the US, one of the most important data releases this week. So feel free to join us tomorrow. I think it is going to be during our research webinars, so at 12 p.m. GMT tomorrow. So, but for now, thank you very much for your attention, and I would like to give the floor back to Polina to wrap it all up.
Thank you, Max. Yeah, once again, the numbers came out at 51.5, and if we compare it to the survey, it's only, sorry, no, I'm watching a different channel over here. Yeah, it was, as expected, 52. So yeah, I guess that's a wrap on our today's economic data release. Thank you very much for being here with us. Please don't hesitate to share your views on the numbers themselves, and also in case you have any questions, feel free to post them into the chat section. We'll be very happy to address them. And don't forget that tomorrow is going to be the 12 GMT research webinar. You're very welcome to join. Meanwhile, I would like to re-invite Lukasz, who goes by the name Young Z, and continues wanted PIB box Renko price scalping webinar. Thank you very much, and we'll see you very soon. Bye.
Okay, so we are coming back to our webinar. Basically, just before the UK data, we did expect some